Hi, I'm Paige Steers here at the Crew Convention in Chicago talking to experts. I'm with Nicole Pecoulas. And Nicole, we're talking about commercial real estate lending. So you're a portfolio lender looking at opportunities in the market. What are you seeking?
As a portfolio lender for Mass Mutual Life Insurance Company, Cornerstone Real Estate, we are seeing a lot of core deals. We love to lend on core deals up to 65%, which is pretty classic life insurance company stuff. I think our whole portfolio lending in terms of all of us life companies are on target to hit 50 to 60 billion this year, which is pretty standard. Like I said, most of us are sort of that flight to quality A product, very strong, clean borrowers. And when I mean clean, no contentious bankruptcies in their past. And we'll go back 30 years, so we'll check. But there is certainly money to be had. I will say that we have noticed a reemergence of some CMBS as competitors. They're still, loving. We've lost a number of deals on some retail malls, actually, recently, which was always their darling product back in the CMBS heyday. So their rates are coming down a little bit. But for us, as a life company, we would still rather go long. The 5-year money today, we're seeing things go off sub 3% all in, which is pretty amazing, interest only. We want to put our money to work long time because it is for the widows and orphans, which would mean 10 years plus, fully amortizing 2020 deals, things to that nature.
Well, let's talk about the money that's available because it could change. The Fed did say they would keep interest rates low for about 3 years. How does that price into the money available to real estate?
Well, if they keep interest rates low, and really if the treasuries remain, they're sub 2% right now, it's going to keep cap rates low because the cost of capital is low. So you'll certainly continue to see a lot of trades. You'll see a lot of appetite to get money to work, but there'll come a point where groups such as ours will say, you know what, I've got alternative investments that don't look as good as maybe debt.
Right.
So not that we would really constrain because, we get a fair amount of life insurance premiums in a month, and so do some of our brethren as well. We need to get the money to work, and as you know, putting it in money markets is pretty much doing nothing. You might as well have it sitting on the shelf. But with that, I would, I'm a little skeptical that they could keep it down for 3 years because you're sort of, if you really look back over the last 30 years, for instance, we were here at the Crew Convention, the Capital Markets panel. Ed Padilla of Northmark was saying how, what do you think the average 10-year Treasury has been over the last 30 years? Well,
4%.
6.5%. So we're living at this sub 2% today, and that's keeping a lot of momentum. Whereas they thought there'd be these huge defaults in CMBS, particularly in 2010, which there was a huge amount of rollover. Well, that just didn't happen because you had 4% debt replacing 6% debt that was coming off of some of that.
So with this environment, it sounds like there should be more activity. But as we look at the transactions market, it's pretty steady. There's just about the same amount of investment sales in 2011 as we're seeing in 2012. As you look toward the end of the year, do you think there'll actually be an uptick in deals getting done as the money starts to close out its year?
Well, it's kind of interesting. It's pretty typical in commercial real estate that the fourth quarter is a little bit slower. People either know at the beginning of the year, lenders have certain allocations, a lot of them do, and they try to get that out early with good product. If you're going to sell a property strategically, especially institutional owners, and so those are going to go on the blocks more in the summer months as opposed to the winter. And so I don't see that it's going to be a robust fourth, but I would see in the first quarter things will pick back up.
Yeah, allocation's ready, and they're going to be coming to bear.
That's right. That's right.
We'll keep our eye on the market. Thanks for sharing with us today, Nicole.
Thank you.